Hello everyone. Let's take a look at the current situation. We'll compare it to the situation when we were building a long position, answering questions about whether to close it, and the long position we started accumulating on July 8th. And should we open a short position or head short or take any action with our position at all? But let me remind you that I posted in the Telegram channel where I explained in detail and discussed why I was opening a long position in real time. I recorded my screen. In the screen recording, you can see that the price of Bitcoin was at 61,855 instead of 61,855, and we saw the green line and the red line cross. And here, I already explained in detail why I'm opening a long position. What the green and red lines mean, you can see all of that in the Academy. Everything's explained in detail there. Since these reviews are supposed to be more entertaining, because that's what keeps people watching on YouTube, the retention rates go up, so I won't go too deep into the details of what each metric means. I'll open the long preset now, and let's take a look at our situation. On July 8th, a new buyer zone formed for us. The green line crossed the red one. On top of that, there was another positive sign. The previous buyer zones, that is, the previous crossovers, happened at lower prices. In other words, each new buyer zone didn't set a new low compared to the previous one. Accordingly, this tells us that the market Bitcoin is pulling limit orders closer and closer to the market prices, thereby giving the advantage to the longs. And that was one of the arguments suggesting that it made sense to consider going long. I never look at just one argument. I look at least 5 or 6 arguments, and now we'll go through them. So regarding closing this long position, I'll open the first preset right away. That is, the first argument we'll consider and analyze. So when the green line crosses the yellow one, it means the market is entering the seller zone. For example, if I open up some altcoin, let's say a well-known one like, let's say Pepe for instance, I'll open Pepe. We'll see that, indeed, when the market enters the seller zone, a correction starts and Pepe dropped by 10%. For example, the last time before this, when the market entered the seller zone, it was June 12th. From those levels, we went into a correction again. What's the catch? The nuance is that the price, let's say, didn't set a new high. In other words, our new seller zone was lower than the previous one. Now we've returned again to those price levels where the seller was active last time, but this time there's no crossover. What could this mean? It could mean that the limit seller is sitting somewhere higher and isn't ready to sell right now. Usually, the price reverses significantly at the moment when we actually get a crossover, which is indicated by the seller zone. Right now, there isn't one. At the same time, what other argument is there, at least based on the initial preset analysis, not to say that a short situation is developing right now? The previous buyer zone was right here. Let me clear everything unnecessary from the screen and mark it. The last time the buyer's zone was in this range was on July 8th, and the seller's zone was... Here was the buyer's zone, and again, the seller's zone was right here. So at that moment, the price was here, and notice there wasn't much movement at all. Let's say there was only a minor move as the market went from the seller zone to the buyer zone. Then the price was brought back to the range where the seller was active, but the whole market didn't reach the seller's zone. There's no overlap, which tells us something again. Let me repeat. The limit seller will distribute all altcoins, at least locally, at higher prices. From this, it follows that each seller's zone is higher than the previous one. So let's assume there will be a new seller zone here, and each new buyer zone is higher than the previous one. In other words, these are the levels, let's say, the places where the limit buyer was active on Bitcoin. So what does this tell us? It tells us that we have higher highs, higher lows, and Bitcoin is already in an uptrend. That's a positive sign. And locally, even just considering the first argument, the first preset, we can conclude that there's no reason yet to close the long position we opened on July 8th. But of course, one argument isn't enough for us, so let's move on to the next metrics. Now let's take a look directly at margin loans. By the way, for those who don't know, we're using the Trading Platform Pro service. This is a service we developed for analyzing limit orders and margin orders. We know everything about limit orders, so we understand what will happen to the price in the future, because it's the limit orders that show us the future of the market. Next, margin USDT. This is a metric that shows the amount of USDT borrowed by margin traders in a day. I'll immediately mark the $250 million level because this level is a reversal point. Let me mark $250 million for accuracy. It's ready, and this is what you need to focus on. Well, let me first show you how this works. When margin traders borrow $250 million in a day, that's what they're taking. Why? In order to go long on altcoins, because USDT margin is borrowed to buy with, while coins themselves are borrowed to short. But in this case, we're looking at USDT, so we're talking about going long, and when $250 million is accumulated, that's when corrections start from those levels. But right now, since July 8th, we haven't had any. There hasn't been any buildup of longs. At the same time, this is actually a positive sign. The positive thing is that we have, let's say, a level, around 63,700. So this is the spot where margin traders borrowed $160 million from the exchange. There was a slight increase, a really insignificant rise. And what's happening now? Margin traders, when the price reached the entry point, got scared and started returning their coins. They gave back $73 million. This means that the sentiment among margin traders right now is that they don't believe the growth will continue. And that's a positive sign. It's positive because, first of all, there wasn't a climactic buildup to $250 million like I just mentioned. And secondly, as soon as the price starts to drop, they immediately exit the market. That's a positive sign. This sentiment tells us that specifically among margin loans, the sentiment, don't confuse it with the overall market sentiment, is that margin traders don't really believe in going long and they're afraid of any correction. This is a positive thing for us. Even though margin loans tend to show better entry points for shorts rather than longs, we can still observe their sentiment, and their mood is extremely, let's just say they're afraid of any correction. But we also looked at the margin metric, and again, it tells us that for now, there's no reason to close the long position we opened on July 8th, which should already be at break even, definitely, to lock in profits right now. There's no reason for that. But two reasons aren't enough, so we're moving on to the third one. And for that, we'll switch to the ETH coin, because it serves as our insider for margin loans. And let's open the metric that shows us the ratio of long to short accounts for the coin we've selected. In this case, it's ETH. Take note of where the metric is right now. The metric is at 5.27. This means there are 5 times more longs on ETH than shorts. Let's see where similar values have appeared before. For example, on May 7th and 8th, we saw similar values here, after which ETH went up, though it was a minor increase, just about 3%. There were similar values close to where we are now, March 27th. And here, basically, the outcome wasn't positive for those who held longs, because the price dropped by 20%. We also had similar values on March 22nd, and we saw a pretty decent move then as well. And on February 23rd, those were also times when there was a strong price movement. At that time, there were few margin loans and longs. Specifically, the ratio of long to short accounts on Ethereum was low. There were few longs. And right now, there are also few longs on Ethereum. When longs on Ethereum start to increase, yes, after that, we usually see a drop because the market goes after those long traders. Right now, people don't believe in longs on Ethereum. This is positive for future growth. But also, this is another argument that shows that for the insider coin, which is the Ethereum, there are currently no short side anomalies in margin loans. And as a result, we also don't see any reason to close longs. Right now, I'm looking at the long-short account ratio for all coins at the same time. And here, the picture starts to emerge. What we see is a negative outlook. A negative picture because of the margin. There are 1.9 times more longs than shorts. And what happened when prices reached these levels? For example, on June 2nd, there was a similar ratio, after which we saw a drop. So for Ethereum alone, the situation's positive, but if we look at all the coins together, it looks negative. Next, this part looks pretty good. So the margin loan ratio of long to short accounts has increased, but it hasn't even reached the levels we're at now, even though the price was much lower back then. We also saw a drop, and before that, it actually gets kind of scary, because before that, even though we were at more extreme levels, those eventually led to a pretty serious correction of 43%. From this, I can already draw some conclusions right away, and the conclusions will be as follows. That as soon as the short crossover happens on that, or on the total, it shows us this simultaneously across all spots on Binance. Again, I won't overload you with too much terminology right now, You can check all of this out in the Academy. That's for those who are interested. Because for those who aren't interested, I won't even go into detail right now so you don't lose interest in something that could actually help you make money. It's actually kind of a paradox. So, as soon as we get a crossover, for me, that will mean that given what's happening with the assortment of long and short accounts, on margin, you'll need to exit the long position. Don't try to hold on to it. Don't try to take a risk and catch a correction, hoping that the new buyer's zone will be higher than the previous base, and that way you'll catch a long upward trend. No, guys, we're not going to take that kind of risk right now. You get it, right? We were thinking that supposedly something would happen here. A short crossover will happen, there will be a correction, and the new buyer's zone will again be higher than the previous one. I'll move my stop to lock in profits, grab it. Damn, the trend. No, this time we're definitely not going to do that. Because considering what's happening with the ratio of short accounts on margin across the whole market and all available margin pairs, it's risky to do that all at once. We risk losing quite a decent profit here. So as soon as the market reaches the seller's zone, we'll exit our longs. That's when things start to get more interesting. We've looked at sentiment on margin loans, so now let's check the sentiment on futures. For that, I'll open the funding tab. By the way, we also display funding in a unique way. I'll also add training videos to the Academy, probably even today, about funding, so you can get familiar with it. For now, I'll just show you what I'm looking at and open the groups above where it's negative. The main point here, let's open some altcoin again so you can see how funding works. We analyze this funding across all coins at the same time. That is, not for any single coin, but for all of them. And when there are more longs than shorts in the market, for example, here with a number of coins, they immediately go into a correction. Let's say, for example, that Pepe is a strong coin at the moment, right? But let's open up another one. Let's say Starknet, the most well-known Starknet. Most of the coins, of course, go into a correction. For example, on Starknet, there was a situation when there were more longs than shorts on the entire market, on all futures, and as a result, Starknet dropped by 8%. Before that, there was a situation where the red line crossed above the blue one, and again, there was an immediate correction of about 8%. That's why, when there are more longs than shorts on the market, you need to be very careful with longs. Of course, there are coins that grow against the market, like Pepe, for example, which has shown strength recently, but still, Starknet isn't showing strength and is correcting quite well from these levels. Right now, 14% of all Binance futures pairs are being shorted with such large amounts that the futures price is lower than the spot price. Okay, I get that this might sound complicated for some people, so let's put it more simply. In other words, when we have the funding rate for the group becomes negative and reaches a certain level. From these levels, you can start considering going long. We're already moving toward those levels. By the way, we're close to them, but we haven't reached them yet. So at the very least, this means we're not considering going long right now. It's possible the price could be pushed even lower to attract enough short sellers, but I don't see anything extreme in the funding rate at the moment. We won't even stop to look at it for now. And let's also look at another argument, which I call DIV15. This is probably our next argument, and then we'll draw some conclusions. DIV15 shows us the difference between limit buy and sell orders at the depths we have selected. But in this case, as I mentioned, it's 15%. So subtracting all the spot pairs at this depth, what do we see here? At the very least, we have... So let's say our minimum growth target is the 0 level, meaning when the market comes into balance. Right now, there are 200 million, actually 222 million more buy limit orders at this depth, which means it's an abnormal buyer's zone. We've been in this zone for quite a long time, almost 2 months now, or about a month and a half. Nevertheless, we're already approaching those levels, but we haven't quite reached them yet. Key levels that previously marked the start of corrections. That happened here, and it also happened here. So guys, what conclusions can I draw based on this review? The longs that I opened on July 8th, which I talked about in a video on my Telegram channel, you can scroll through and see for yourself. I'm still holding those longs. At the moment, I don't see any clear reasons to open a short or to close my long positions. Yeah, maybe there's some correction happening right now. That's normal. It's impossible for there to be green candles all the time. I don't see any problems here. The stop definitely should be at break even for those who entered the trade with me. Definitely. But I'll repeat, I don't see any reason to close this long and open a short. We've looked at a number of metrics but not a single metric has reached the levels from which short positions started last time. Yes, there are metrics. For example, the long short account ratio across the whole market that we talked about. But again, that's the only metric that's at a point where I wouldn't want to consider longs anymore. But first of all, it hasn't reached the levels from which the short was triggered last time. It's close, but secondly, it's just 1 out of 6 metrics. And a short is a synchronous event. Markets fall at the same time and are distributed in the same way, give or take all at once, and then they get dumped by trading bots according to preset algorithms. But for now, the market hasn't reached the distribution zone. I'm holding my longs and not closing them yet. I'm keeping the full position. So in the next review, we'll look at the situation as it unfolds for the new day. I do reviews on a daily basis, and we'll compare it to the situation that might develop today. Tomorrow, there might be a situation where it's time to close this or open a short. But if you're interested in what I'm talking about, check out my Telegram. There you can get more details about the possibilities. The Trading Platform Pro service. Subscribe to this YouTube channel. Here, you can make money and learn everything about limit orders, because they're the ones that show the future of the market. That's all from me. Thank you all. Goodbye.